Hi traders, Richard here, and in this video I'm going to focus again on another corrective pattern. Now, if you can remember from one of my previous videos, I showed you what was called a zigzag or an ABC pattern, specifically a corrective type pattern. So in today's video I'm going to be looking at corrective patterns again, but we're going to move on a little bit more to a slightly more complex pattern, but also pretty easy to spot. Just a quick recap. We looked at zigzags or the ABCs last week. And this is actually on the Euro 5-minute chart, very recent price action. Here's a beautiful ABC right there. And price moves lower. I also discussed the internals of this patterns, i.e. the internal symmetries, how they tend to like to, or these phases or legs as we call them, or waves as eliticians would call them, typically move the same distances, right? What I mean by that, very quickly again, if I just had to get out my Fibonacci extension tool here, we have a move up, that will be an A, a move down for a B, and then typically your C wave or the last leg of that zigzag or ABC will reach around about 100% or 138.2, or as the platform says here, 1.382 extension. Right. I also showed how you can typically just go and use, for example, a rectangle and go highlight that zone between the 100% and 138.2%. And that's typically where those legs end. Before I move on to the next pattern, it's a variation of this one, a little bit more complex. Let's just quickly put that ABC in there, just to recap things for you guys. And that's pretty much what they look like. Again, a very, very common pattern. There's one over here, for example, and they appear in both bearish and bullish markets during corrections. And that's typically the behavior that they show during their formations. Right, so the next one I'm actually want to show you is called a double zigzag. Before I actually find an example, there's one that formed on the 1 hour time frame a little while back. Again, this can appear on any time frame that you're trading in, but for the sake of explanation here, let's quickly use a path tool. So we looked at, for example, an uptrend, right? And then we have an A, B, C corrective structure that goes against the uptrend, and then a continuation back upwards, right? And we focused on the shape of that. Again, just an ABC or a zigzag. Now today we're actually going to be looking at what's called a double zigzag. So instead of just having a singular zigzag pattern that then moves lower, price then fails to actually break to a new low, thereby ending the pattern as it would. If it was the end of an ABC, it then finds support again, and then you get a secondary ABC, and then a move to the downside. So you basically got two ABCs that form after each other. I'm going to be looking at that price structure in more detail when I show you a live, or actually a formation of a double zigzag that formed a while ago. So I just want to quickly label this. So you had an ABC there, you then get a move down. But rather than going to a new low or new high, depending on which direction the corrective pattern is unfolding, you'll get another ABC. This is why it's called double ABCs or double zigzags. Right, now you can go an actual step further if you really want to get into how to label this properly, or get into the discipline of labeling your charts. You want to go mark them up as they appeared in history, which is generally a good exercise to do. The eliticians actually, or those that practice Elliott Wave analysis, actually refer to these as double zigzags, but the labeling that they use is a little bit different. So after you've got an ABC, they would call that first zigzag a W. Then this, let me just use a different color here. This axis over here that basically combines the two ABCs or zigzags together. Let's again use a different color. Let's make it nice and thick so you can see what I'm doing. Let's use a different color, make it red so it stands out. So that axis over here that combines the two ABCs together is called a WXY or the whole formation is called a WXY. I'm just going to get my tool out here again, but that axis is called a WX axis. Again, don't worry too much if you don't want to go and learn all about the actual nitty-gritties. I'm pretty much just like focusing on the actual shape of the entire thing, knowing zigzags are the most common, and that after that you're potentially going to get a double zigzag, two zigzags combined by an axis. Now you want to call that a WX. Sorry, that should be an X. Let's just get rid of it. Not a Y. When you want to call it that or not, it's really up to you. But in any case, after the formation of the entire pattern, Elliott Wave theorists, or those that practice that type of analysis, will call this entire pattern a WXY, or otherwise known as a double zigzag. But that's just like an additional way that it can be labeled. Like I mentioned, I just like looking at the entire shape and then also the underlying symmetries that's typically prevalent in these patterns. All right, so that was a quick recap of the single zigzag. As I mentioned, we're going to be looking a little bit more at the double zigzag, like I just shown you what that typically looks like during its formation. There was a nice one that actually formed here on a 1 hour time frame. Again, just looking at Euro US dollar, it could be on any chart and any time frame. So actually this one over here, I've actually marked that out for you guys to see properly. Let's blow that up and delve a little bit deeper into this formation. Here we can clearly see that first ABC or zigzag. Pretty easy to spot that. And in many cases, if you were trading expecting an ABC, price then moves lower. But in this case, it fails to actually make a new low or see a proper trend continuation. This is typically where I would go then and switch to what I believe the next pattern could be, or the next most common pattern, and that's a double zigzag. So a single zigzag potentially morphing into a double zigzag. So here's that WX wave that I talked about. And what do we get? We get another A, a B, and a C, and then a move lower. Let's go label that up quickly, just so you can see the formation. Again, rather focus on how the entire formation looks like. Just two zigzags after each other combined by a single axis. All right. Let me just go and grab my labeling tool. So this would be your first ABC. And then we have another ABC. Both of them joined together by a WX axis. Let me just go mark that up, make that red again. And the entire thing would then again be labeled if you wanted to do so, rather than calling it a double zigzag, a WX Y pattern. All right. So that is what a double zigzag looks like. Typically for me personally, if I see a correction unfolding and it's against a trend, I always assume it's an ABC. If it fails to be an ABC, as should be proven by price not moving in this case to new low, makes a new high again against counter trend, then I'll assume that I'm potentially dealing with a WXY double zigzag instead. Right, so let's clear all those drawings off there. And before I finish this video, last time I looked at the actual underlying symmetry. So first ABC fell a little bit short there of the 100%, but came very close, right? That's typically a behavior of that last wave or phase to the upside, generally moving the same range as the first one, all right? Now we can see the same sort of behavior here on the second one. Also very close to actually reaching that 100%. Okay, obviously things are not always going to be picture perfect and reach those percentages, but that's why it's very important to focus on the overall structure of the corrective pattern, and expect that if it does move against you, for example, you'll see at least new higher highs, new higher highs, newer higher highs, and then see the entire pattern as one, and then try to use this information to figure out, trying to stay a step ahead of what the market's doing, trying to assume that it might be doing this and this and that, so that when you do get a move moving in your way, you were well prepared to then get into a trade and potentially profit from it. So there we go. Before I sign off again, that is your ABC and another ABC. Two ABCs joined by one axis, and then it ends, and then you're going to move lower. That axis being your WX axis, or an entire thing called a WXY. Right, so that's the second pattern in the series. This one after the single zigzag, basically a single zigzag morphing into a double zigzag. Hopefully you can use this information to your advantage if you do like trading corrective patterns like me, and just helps you to try to figure out what the market is doing and if it is behaving in a certain way, and then using this information, you can then sort of formulate an idea of what might be happening when that pattern ends, where that pattern might end, and that sort of stuff. So very useful information to use. Thanks very much. I'll see you in the next one when we discuss another different type of corrective pattern, potentially moving into our triangles this time around. Thanks very much. Have a good one, and I'll see you next time. Bye-bye.